Good afternoon, traders. This is Bill Baruch with Blue Line Futures, and this is the FX Rundown. Tomorrow is all about jobs, non-farm payroll, 7:30 a.m. Central Time. Remember, last month, the read for August beat expectations, came in at 0.4, the highest read since December. Now, tomorrow's expectations are for a gain of 0.3, annualized, coming down just a bit to 2.8%. The wages is really the big number here. Is wage growth showing up? Is tomorrow's read going to confirm that August read that came in September? And ultimately what we're seeing here too is a big move in Treasury yields. Now that move happened yesterday. This came on the heels of FOMC. They weren't so hawkish last week, but ultimately it was comments from Fed Chair Powell late in the day that was a dagger in the prices of Treasuries, and it lifted the US dollar. So with his comments, he is now talking about the neutral rate for the Fed funds rate being above 3.25. Now, with this wage growth coming tomorrow, if this comes in hot, this is only going to support his hawkish comments, and it's going to lift the dollar further. Surprisingly today, the dollar did not run overnight after his comments. It rallied into the end of the session, and then it stayed in with the ceiling from there. Same thing to the downside. We saw the euro actually hit our minor support level right around 115.25 and consolidate. Could not get out above 116 where we had some resistance. Ultimately, though, when it comes down to this number tomorrow, if it comes in hot, you're going to see the dollar lift. If it comes in hot, you're going to see the euro go lower. So you're going to be ready. We've called it in the euro. It's almost in no man's land, below 115.25, and it could get down to 114 just because there is not a whole lot of support. Now, if this number comes in line with expectations, we're going to see much of the same price action we saw today. Consolidations, you're going to see support likely hold. And then that resistance level up near 116, we need to see the euro get above there to neutralize things. The job growth at 185 is going to be a component to watch. ADP payrolls did come in much stronger than expected on Wednesday at 230,000. If we see a number up near that, you're going to see, again, it's going to help lift the dollar, but really the major focus is going to be wages. So keep an eye on this number tomorrow. It's going to be critical with what we see. Moving on to the yen, we did see a little lift in the most unenthusiastic trade on the board, but it still could not get out above first resistance. The only reason it lifted is because of a safe haven demand with the equity markets moving lower. If the equity markets move higher tomorrow, and then look for the yen to pair those gains from today and remain the most unenthusiastic trade on the board. The Aussie lost ground as well today as the dollar was firm late in yesterday's session, and the Canadian dollar got hit really hard. Now you've got as well jobs data coming out of Canada, so watch for that tomorrow. But really what really put pressure on the Canadian was a massive miss on the IVPMI read. Came in just above neutral at 50. If it was below 50, you would have saw a contraction. Now they were expecting 62. So this is a really big miss, and it hit the Canadian hard. Watch for that jobs report tomorrow. You know we've been upbeat on the Canadian, but now you have to be neutral. You got to look for a jobs number that offsets this really poor read on IVPMI. Give us a call. We're here to talk about anything on the board. 312-278-0500. Email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial or research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.